All right, folks, welcome back. Man, am I feeling good today. I just had my back adjusted, and it literally feels like I'm 20 years younger. Yes, 20 years younger. So, I'm in an incredibly good mood. I feel wonderful, thank God. And I'm going to review this market today, and then tomorrow we're going to go into our regular teaching midweek and a little bit more substance behind the videos. Again, thank you for your prayers. Thank you for your concerns. There's no need to send any more because I'm getting a lot of them. While I appreciate them, I just know that it's not necessary, but thank you. All right, so this is the dollar index weekly chart, and I want to bring something to your attention. We started the new week here on the open, and we have traded up into the last up close candle. Now remember, we've taken buy side liquidity here with this run. We broke down below it, and we're bumping up into this bearish order block. Now it can go a little bit deeper and hit this old low here because there's a small little imbalance. I'd prefer that it didn't close that in. Like, in other words, from this low to where we are as a high on this week so far, I'd like to see that remain a small little gap and then come down and attack this area here and then maybe dig into this. So I haven't really abandoned my expectation for a softer dollar. And as a reminder, the economic calendar has EU news that's pretty heavy-handed later in the week. So this may be just a precursor to running up to a premium and then seeing euro dollar go higher as a result of whatever central bank stimulus they may or may not implement. Okay, dropping down to the daily chart for the dollar index, we have our breaker, high, low, higher high. We've traded down below it, and today we ran right back up into it here. So this red level here is the same red level that exists on the lower time frames when we drop down. It's also digging into that weekly bearish order block. Sell side resides here. We have a smaller short-term sell side liquidity pool here. So we had a half a penny move, basically a retracement from this low of last week into, again, bearish breaker. Now again, like I said, it could dig a little bit higher into that weekly range that closes the gap. I'd rather see it not do that. And we have this range here that's a gap, and then we have one single candle pass down. So this I'm looking for as a balanced price range. So if it needs to dig up a little bit higher into like maybe 92.60 or so, I want to see it. If it's going to go here to take the buy side out, leave this open. It can go up into it a little bit, obviously, to take the buy side, but I want to see it. If it goes there, then reject and go down. But what we've seen so far for the week for dollar, we have had a small little buy side imbalance, sell side inefficiency with bullish order block. We saw it spike down into this on the 6th. One more attempt to trade deck down lower. Almost a ideal scenario where it comes back down to an order block, fair value gap. It rallies, immediate rebalance here, and sends it up into the bearish breaker on the daily chart. So this red level now is the bearish breaker, and we have buy side resting just in here. And again, I don't want to see that fill in. Now, if we do overlap this entire range, I don't think it's going to go there, then go lower. I think it'll go there and keep on going and attack the buy side here. And in that event, my analysis is absolutely wrong, and I'll just have to take the L for that. 15-minute time frame dollar index. Okay, you can see we're digging into that bearish daily breaker. Across the daily spectrum, we have the daily low here, rallies up, buy side here, trades lower, one more impulse above the high here, and the highs over here, trades back down into a small little fair value gap there, optimal trade entry, rallies, takes another high out, trades back down in, bullish order block, fair value gap, recapitalizes again, rallies, Small little imbalance in here with a order block. Last two down closed candles. Trades into it, rallies. Buy side imbalance, upside inefficiency. Bullish order block, trades into that. Rallies one more time. Then consolidation at the bearish breaker. I want to see it go above this level here and then reject and go lower. That's the ideal scenario because we've traded up into the breaker relative to the daily chart. We're up into the bearish weekly order block as well. So it looks like they pressed it higher, 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 and we're just digging in there to make a premium market. That's how I interpret that. I might be wrong. I'm not trying to sell it too hard, but it is basically, it's, to me, algorithm just digging in more and more and more, where if this was, I guess, much more animated to the upside and not requiring so many pullbacks, it just looks like it's grinding against the underlying bears. Okay, so it's a squeeze, if you will. I guess it's the easiest way for me to make it where you'll follow me. Okay, everyone's pretty much familiar with a bear squeeze. So anyone that's bearish on the dollar, it looks like the algorithm's just pressing and digging into those individuals. But we're at a level where it needs to start showing some respect, or they may be utterly reversing the market. That might be happening. You know, that I may completely be wrong with my analysis, and that's okay. But for now, I'm going to stick with it because we don't really have a setup yet, and nothing in here would have given me a losing trade, if you will, because it has to line up with something that would give me a sell-off in the dollar index and a buy in euro, because the only thing I covered yesterday was euro dollar. So looking at the euro dollar here, I was bringing your attention to this small little fair value gap. We had traded down into that, completely rebalanced it, and I still think this is a draw on liquidity here. And what changes that before I go any further with this? If we go back below this candle's opening, now why below this candle's opening? Because we hit the breaker here. This is the breaker. Low, high, lower, low. Take the body of the candle, extend it out. If it goes down and hits that and rallies up, this here, if we trade below that, that to me is like changing the state of liquidity. It's not bullish, in my opinion, if it goes back below this opening price, because this is where the launch of this run happens. So if we trade down below that price level, that to me is bearish, and they're probably not going to come back for this buy side liquidity in the near future. And they'll probably be more inclined to take it lower. But as long as we're above this candle's opening price, and again, let me make sure you understand why I'm picking this candle out, because I know some of you are probably scratching your head. If I stopped right now and didn't say anything more, it'd be like, oh, I don't get that. Why did he mention that? Think about what's occurring here. We have a PD array in the form of a bullish breaker. Here, I mentioned before we traded this like that, if we trade above this here, it would act like it's a bullish breaker, and we got that. So this candle here delivers that run off that bullish breaker. So if we trade below the opening price, that kind of like negates this whole idea of springboarding away from a discount PD array in the form of a bullish breaker. So to break down below that, not this candle here, because we had it opened here, small little move lower, and then went higher and then gave up a lot of that range. That doesn't signify the absolute beginning of the move. The beginning of the move on the breaker is here, because we open here, trade down, then respect that level aggressively, and then send it higher and close on the high, taking out this entire range, both the high and the low. On this candle here, it traded outside that range. So I'm taking your attention to this candle's opening price for that very reason, that it went down to the breaker on that candle and rallied. So if it goes below this price again, why? Why would it need to go back down there? I don't look at that as a reclaimed bullish breaker, like an order block. I don't want to see that. To go back down below that opening price, to me, indicates bearishness. So everything above this opening price here is still setting the stage for a run up here. That's how I interpret it. Now, the reason why I'm okay with that form of analysis is because we may still just stay inside of a range. Nothing is absolutely bullish or absolutely bearish right now. Everything's in the stagnant consolidation since, well, the last week of June, right in here. So we created this high, this low, and we're just going sideways. Nothing is energetic. Nothing is parabolic. And this is also a reason why I'm not ringing in the commitment of traders, COT data. So if you've been asking questions in email about why aren't we talking about COT and why is this not happening here and why is this not being useful in commentary, because we're in a range-bound consolidation. Okay, so that market profile, I like to use COT when we have a trending market. So that way I can see when the hedging is occurring. I want to know when it's a really good expectation to be a buyer in an underlyingly bullish market. Right now, there's really no definitive bullish or bearish. It's just what's the sentiment play at work right now and where's the liquidity. Notice that's what we've been doing for months now. We're not looking for any kind of long-term trend. We're not looking for any kind of differential in the rates. Okay, we're just basically looking for short-term volatility, keeping it close to the vest, and just looking for runs on liquidity. That's it. And that's because we're in a range-bound consolidation profile. So the market profile that we're under in the present moment is just a sideways market. It's not likely to go higher. It's not likely to go lower with a great deal of longevity. It doesn't have that continuous staying power in one side of the marketplace, higher or lower. So you have to be very nimble in this market environment, which also opens, if you're trying to provide an opinion like I'm doing every time I sit down with you, I'm forcing myself to tell you what I think is going to happen. I would not be obviously trading yet, but I have to at least give you my interpretation and give you the reasons why I think it may or may not do these things. So yesterday, I was outlining how this has traded back down here, rebalanced. This whole range here has been rebalanced until we had this small little fair value gap. Then we traded down in. I said, now it's open to running up here one more time. Now, if it runs up there and then breaks down, I said then I would be interested in taking a bearish breaker. But I would not be interested in a bearish breaker when we go in lower time frames. And you can see it was not able to deliver on the basis of a bearish breaker, even though it did trade lower today. So let's just play devil's advocate for a moment and say I did trade today. Say I would have taken a trade today with the idea that this market's likely to go higher. The question I'm going to pose to you is this. The opening on this day is here. At what point below the opening price would you be a buyer? That's what I want you to think about when we go into lower time frames. Now, with the hourly chart here, the opening price, if it goes below the opening price, we're going to be inside this area here or lower. So what over here constitutes a good low risk buy? Nothing. Nothing in here does that because we've already had this down close candle traded down into here and then it rallied up. There's no fair value gap there. And to go below these lows here, that's the run on liquidity. We traded through both the discount and premium levels of that fair value gap on the daily chart. And I mentioned with the annotation on the chart this fair value gap here. And I failed to mention that if it was to fail, if it trades up here and then breaks down, then we would probably look for a run into the liquidity here. But I got distracted in my commentary yesterday and didn't mention it. So I drew special attention to this fair value gap, and you can go back and watch the video. But nothing came out of my mouth that should have been what I'm saying here, which is if it goes to that fair value gap and fails to go higher and breaks down, then obviously we'd have to consider the run on liquidity here. Now, I'm saying that in honesty, but I can't take any credit for that. So I don't want you thinking I'm trying to save face. It's just what it is, okay? Besides, you know about this. When we trade back into a fair value gap, if it starts to respect that, it's going to act as a premium array. So while I still believe, even with what we have now, I still believe that there's buy-side liquidity up here that may use this as a target for the week when we look at the euro high impact news later that has yet to meet the market. But let's assume we're going to trade lower still, and we could, because the dollar could still go a little bit higher. We have sell side liquidity here, and then we have this buy side imbalance, sell side inefficiency in the form of this imbalance. So it could trade down into that, and I don't want to see it trade below this down close candle. So say things get wildly excited in the dollar index and it wants to rally, I don't want to see the euro dollar trade below this down close candle, because if it does, then we're going to have to consider that and a much higher dollar. Okay, so that's what I'm looking for to frame a setup. Now, if you look at what was going on today, all of this back and forth price action, and then it eroded. We're going to look at why that took place with the euro pound last after we talk about cable. But for now, there's nothing in here that would have set up a buy. So even though I'm bullish, and I was bullish on euro, nothing in here sets the stage for that. We didn't have any kind of real imbalances that could have been used. And it just would have been a day where it doesn't give me anything. Even though it does trade lower, against what I was outlining yesterday, there was nothing in here for me to take a trade on, so that would have equated to a losing trade. Now, some of you that are doing things that you shouldn't be doing as mentorship, by me saying I think it's bullish on euro, maybe you went in there with your demo account, or maybe you went in with a live account doing things you shouldn't have been doing, and you tried to trade with that idea, and it maybe hurt you. The question is what are you leaning on? What are you seeing in price? Because all of this in here, that's too much of back and forth in an expectation for the market to go higher. It doesn't look like it's all that bullish. And in fact, it was struggling back and forth in here and then broke down. So the only tool or visibility that would have lent well to seeing this breaking down was through euro pound. So here's the 15-minute time frame on euro. Again, look at the back and forth price action, and then ultimately trades lower. There wasn't any real economic news of importance that came out today. So all of this in here was just erosion to take out the sell side liquidity. Market trades lower, comes back up in, rebalances to the bearish order block, which is the last two up close candles in here, and breaks down again deeper. And in this area here, look for that 118.20 or thereabouts as a potential downside. And then what we do there is critical for the rest of the week. All of this could be simply just reaching for a more significant discount for the economic news that they're going to release on the marketplace. This, again, is selling the idea of bearish, and what happens if they have a real high impact news event hit the marketplace when all the sentiment is one-sided to the downside. In my mind, that sets the stage for an ultimate run on liquidity, which would take us above these highs and the high up here from previous week. Pound dollar daily chart, and again, I really didn't have anything talked about in yesterday's video about this pair, and the only thing I mentioned when we were referring to it in the Friday video of last week, which was the weekend commentary, I mentioned all we were looking for is this area here to take that liquidity out. They did run it, and we have seen it drop down rather nicely since Monday and Tuesday's trading. I don't have anything here I like. I don't like all of this back and forth price action here. If it didn't have all this, I'd say watch the order block in here. But it's too muddy, and I'm just going to refer to what's obviously in your chart here. So cable or pound dollar, I'm neutral on. All right, you can see we had the market push into a premium overnight, and then we broke down. After midnight, we had a run up into the bearish order block, fair value gap, and then nice return back to the opening price essentially, and then it dropped lower. Notice it didn't take out the liquidity below here. I was expecting it to do that when it was running here. Didn't get down in there. We have a small little portion of the fair value gap there. That might be something to watch as well. So if we do trade one more time lower, watch this level in here. We could take sell side out, and then if it does that first, maybe run back up into this area here. Now, it's not a lot of pips, but it's still something that you can practice and study. And again, 15-minute time frame, pound dollar. Again, you can see midnight, traded lower. Here's your Judas there. Trades above the opening price. And then breaks down. Mitigation block. All of these have closed candles consecutively. Mitigation. Leaves a gap opening. That's nice. And declines aggressively into New York Open. Then consolidates for the rest of the day. Again, neutral, I don't have any real opinion of any importance that would, again, be helpful to you for this pair. I'm sitting on my hands, basically. All right, so let's talk about Euro Pound. I've mentioned in the past couple weeks why Euro has had a difficult time in its decline, and the reason why is because of this pair here. It's been bullish. And what makes it bullish? Well, if you look at what's transpired here, we traded below the old low here. So it took that liquidity and then rallied through, creating a bullish breaker. Traded down into that, hit it. So once it hits this, if this is going to act as a bullish breaker, where's price going to go? Well, we have buy side here, and then above that and to the left, we have the fair value gap there. That's what it traded up into today. It traded up into that and then pulled back off of that. So all through here, this is what's been making the euro dollar less likely to be high speed decline or very efficiently delivered sell side. Okay, so while this pair is bullish, we have two scenarios. Euro dollar goes higher and cable goes consolidated, or euro dollar is consolidated and pound dollar is allowed to decline. Both of those scenarios equate to this pair going higher. We see it trade up into this fair value gap there. Now, what my concern is, it traded up into that and then came out of it pretty quick. It's not to say that it can't, press in and dig into it more over the next couple of days, but I would have rather seen it do this run here with the cable market or pound dollar in consolidation, not sink pound dollar. So pound dollar sank and traded lower aggressively, in my opinion, today and yesterday. And euro dollar was consolidated and then allowed to drift lower today after euro pound traded up into the fair value gap. So this was a little tricky. I was off on my interpretation of this pair. I was looking for that very thing. I was looking for euro dollar to rally higher and pound dollar to stay sideways and not really try to trend too much. But the banks used cable going lower and euro dollar being held in consolidation to make this pair go up. So again, it's like the analogy I've used many times in the past. If you go to casinos, which I don't do that, but if you go to a casino and you play the roulette table, the average person on the street, you ask them, how do you bet on roulette? They'll say, well, you bet on red or you bet on black, and you have a 50-50 chance. Well, that's not true, because you have the green, okay? And the green is euro pound, okay? You can either be bullish euro or bearish euro, or you can be bullish cable or bearish cable. And you think that you got a 50-50 chance. You don't. That's why they have these crosses, because it acts like the green does on roulette. It can always be used as their out. If there's too much money in one market, they can offset that and take it with these crosses. That's the reason why they exist. Okay, so with that in mind, let's take a lower time frame perspective. Again, you can see how we rallied up into that daily fair value gap in line with what I was mentioning with the euro pound being bullish over the last few weeks. And we have a small little fair value gap in here. It trades down into that, rallies, small little fair value gap there, trades into that, and then rallies, and an immediate rebalance on here. We open, trade down, return to the old high, and then rallies into the daily fair value gap there, and then aggressively comes off those highs. The 15-minute time frame, again, you can see it rallies up, trades back down to fair value gap there, order block, rallies, retracement. You've seen the 1 hour chart for all of these returns into a discount fair value gap, and then rallies up again, trading up into that daily fair value gap on euro pound. and then it trades back down. So all in all, this was good in a lot of ways because, number one, we see the effects of the euro pound. I mentioned over the last few weeks saying that's the reason why euro dollar has been reluctant to decline, even though it had a logical sell-side liquidity pool in those relative equal lows. The futures market, if you look at euro dollar futures, you can find that on TradingView, or you can look at it on barchart.com. But the euro futures contract, if you look at that in relationship to the cash market or spot like we look at here in Forex, the euro futures actually went through those relative equal lows on its daily chart, whereas the cash market didn't do that. So it more or less diverged. So maybe there's something of a larger significance in the works where this whole week may be a catalyst to seeing a much significantly lower dollar and a much more significantly higher euro dollar. So just as a backdrop from a macro perspective, that's being implemented in this commentary here, because if we do get that shock in the marketplace with what the central banks do relative to the high impact news for euro later this week, that to me is the backdrop, okay, or the smoke screen that they'll use to send these markets in opposing directions. And I think that's going to be it for today. Like I said, I feel good, so hopefully we'll have more to work with, and I'll have a lot more time, because I literally just got adjusted, right before I sat down to do this video. So I feel good. I'm hoping it lasts. And tomorrow, if I feel like this, I'll probably have a very long video. So prepare yourself, pack a lunch. I'll have a lot of things to teach about. But again, thank you very much for your patience. Thank you very much for your concern and well wishes and prayers. And I'll catch up with you tomorrow in Wednesday's midweek review and commentary. Until then, be safe.